Hello, everybody. Welcome to Wednesday. The S&P 500 was down almost 0.8% today. It was up a lot during the day, actually up almost 2% at one point in time and came down. So, we're still in this fragile stage with this downturn happening. And today it seemed like the catalyst and the time that it started to turn down had to do with a Treasury auction. $42 billion worth of Treasuries were offered. They kind of had a weak demand. So what happens is the yield comes up as they try to basically the market entices, people to buy it at a higher yield. But also at the same time today, we had almost $32 billion worth of bonds being issued by 17 different blue chip companies. That's the most we've had from outside treasuries this year. So kind of hard to tell if it's, hey, is this an economic issue? We do have to watch these treasury sales, make sure that, we can still sell these things. So is it something to do with, the markets, or is it just because today there was a lot of bonds being issued? Really, and again, on a summertime, weaker, time frame as far as that goes. So again, the normal result of these types of downturns is that you're going to get, some bouncing, especially after the 3% downturn that we had. You're going to have, maybe some positives because it gets overstretched, but usually you're going to go down and, challenge that a low or even go lower. So you either create like a W or you kind of come down and then bounce and then hit that low again. And then you take off from that, or you're just, making a false move up and continuing down. So I think we'll probably continue down. I said that yesterday. I just feel like, the market is in sort of a negative mood. There's not a lot of catalyst to the upside, at least at this point. And again, I wouldn't be surprised to see continued weakness for August, September, and October for that matter. Maybe we don't have a big downturn, but nothing really spectacular, just because, we're heading into the election. That September is normally a poor month anyway. Like I've said before, maybe the rate cut, if they do it, does get some excitement going, but some other catalyst, some good earnings. So, maybe Nvidia does another big surprise on the upside and kind of gets things going. They've kind of saved the market a couple times with some of their earnings reports. So, we'll have to wait and see. But just hang in there again. 10% downturns, as I said yesterday, happen 1.1 times per year, going back to 1928. So basically every year on average. And so, looks like we're probably heading for something in that neighborhood. And that's what gets the bulls, the people that really want the market to go up or believe the market's going up, gets them excited, coming in with some dip buying and different things like that to kind of get this going. So usually, though, it is preceded by a whole lot of shorts. They're out there and the market starts making a move. And then the short covering is the thing that usually starts that. And so, we'll see how that plays out this time. But anyway, look forward to seeing what's going to happen tomorrow, and we'll talk to you then. Thank you very much.